This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, we now come to probably the most examined area of assessable benefits within our syllabus, and that is dealing with, as it's called, the company car benefit, i.e. when an employee of any employer is provided with the use of a company car by that employer. Whether indeed the employer is a company or is itself an unincorporated business, it doesn't matter. If the employer provides the use of a company car, in inverted commas, to the employee, this is how we deal with it. Now, here, as we'll see in this first paragraph, we've had in recent years a lot more widespread use of both all-electric and hybrid electric cars. And that brought about a fundamental change in the computation of the assessable benefit for the use of a company car from the 2021 tax year. What happens is we get a whole load of different data that will allow us, depending upon whether it is hybrid electric, whether it's all electric, or whether it's just petrol or diesel powered cars, and indeed, depending on the CO2 emissions, a whole lot of data that will allow us to determine what the assessable benefit is in a very, very specific manner. Now, there is a lot to be aware of there, a lot of information. But here we are most fortunate. The examiner has been incredibly sensible and provided a lot of that data, the vast majority of that data, to us within our rates and allowances page. And if you want to turn now, indeed, to, here we go, our rates and allowances page back at the beginning of your study notes, you'll see the glorious amount of information that is provided to you as regards the car benefit percentage. So a lot of stuff that otherwise would be an absolute nightmare to try and memorise, we don't have to. But what you do have to know is how we put all of this together to compute what will be our assessable benefit when the employer provides the employee with the private use of a car. So back to the note. Now, although these rules changed fundamentally in 2021, a lot of those rates that we've just seen on the rates and allowances page have changed since 2021. And that's why, therefore, this is a newly recorded lecture for specifically the Finance Act of 2021, relevant for our exams, as we know, from June 22 through to March 23. Okay, the Tax UK exam will now only include the treatment of cars that were registered from that 6th of April 2020 date. There used to be a very different system. It was still CO2 emissions based, but a very different system to the one that we have now, that has brought in, as I say, the much wider use of all electric and hybrid electric cars, to which the new rules apply. So you're only tested on the new rules. So you haven't got enough here to equip you with the ability to deal with every situation in real life, but you have got everything you need to deal with the exam question that you are likely to get. So the information that we need to bring together from within the question. Calculation of that assessable benefit will now depend on whether the car provided to the employee is it electric with zero CO2 emissions? If it is, then we'll see an incredibly small amount of assessable benefit, but again a figure that is provided to us on our rates and allowances page. If it's not all electric with zero CO2 emissions, is it hybrid powered? Or is it purely petrol or diesel powered? Along with that information, the things we specifically pick out from the question. In computing that assessable benefit for each car, it's necessary to know, now again I've bolded the critical information here, the level of CO2 emissions. Now we saw the relevance of CO2 emissions and cars when we dealt with Chapter 5, didn't we? When dealing with capital allowances. And it was the most awkward issue of capital allowances to deal with. It's the same here in terms of assessable benefits. Cars are, again, the most awkward, the most variable in terms of how we may compute now the assessable benefit. But at least, pretty much as with capital allowances, all of the, or most of the information we need to be able to determine that assessment or then that capital allowance is provided on our fact sheet on our rates and allowances pages given to us in the exam. So we need to know the level of CO2 emissions, if of course any. We'll also need to know the electric range of a hybrid car and the list price of the car. So we're always going to need to know if there are any CO2 emissions, and we're always going to need to know list price. Those two form the basis of determining the assessable benefit. Along the way, you need to know if it's hybrid, what is the electric range. Now here there's a whole different levels of electric range, and thankfully, again on your rates and allowances page, the percentage that will apply, a percentage used to determine the assessable benefit here, we'll see what of in a few minutes' time, but all of that information is provided on your rates and allowances pages. Depending on the category of the car, a percentage figure will then be applied to the list price. So we'll determine a percentage either directly from the table provided if it is a zero emissions car, all electric zero CO2 emissions car, or if we're talking about CO2 emissions between 1 and 50 grams per kilometre for what is a hybrid car. There it will be go directly to the rates and allowances information and pick the percentage from that. But what may happen, of course, specifically in the case of either just a petrol or a diesel powered car, is that our CO2 emissions are going to go somewhat higher. Now again, we are assisted there by the information in the rates and allowances information provided to you, but there's also going to be a bit more of a calculation to do. Well, there's going to be something that we have to do for ourselves. They can't just give us everything on that rates and allowances page. And what that will allow us to do has been the case throughout in terms of our assessable benefits to compute the annual benefit. So that means, therefore, another issue here. We know that we'll only be dealing with cars that were registered and therefore provided to employees from the 6th of April 20. Now, if a car was provided to the employee within the 2021 tax year and was held throughout the 21-22 tax year, our tax year, then there'll be a full annual benefit. But what you're very likely to see is also where a car has only been made available partway through the 21-22 tax year. So given that it is an annual benefit, you're going to have to time apportion the figure that you compute. If you've only had the use of that employer-provided car for half of the tax year, then only half of the annual benefit would be assessable. Coming back to our note, as we said, thankfully the numbers to be used are provided to you on the rates and allowances pages, provided in the exam, and indeed shown below. All you have to do, of course, is to know how to use that information. Well, here's the first bit, and again, information provided to you in the exam. A 1% assessable benefit will arise in relation to our all-electric cars with zero CO2 emissions. So there, a very cheap assessable benefit in relation to our all-electric cars. Clearly, a very good motivation, therefore, for both employer and employee, who would otherwise potentially face a rather more significant tax charge in relation to the assessable benefit, to go down the electric route. As you'll have seen within Chapter 1, that we have a taxation system that actually, in some ways, not always, but tries to push us into, should we say, good habits, in order that if things are bad for us or bad here for the climate and the planet, then they're going to be hit hard by the taxation system. It's the same with alcoholic drink and with cigarettes. These things are not good for us, and therefore they're hit hard by various taxes that are imposed thereon. So it is now with the use of these cars. The lower the CO2 emissions, the best it could be is zero with an all-electric car. The smaller the amount of assessable benefit that will therefore arise. If it's a hybrid car, then for hybrid electric cars, as we've already mentioned, CO2 emissions between 1 and 50 grams per kilometre. Again, in any question, like with the situation on capital allowances, they'll tell you if there are CO2 emissions, of course, what they are. But if we're dealing with a hybrid electric car with CO2 emissions within that range, then it is the electric range, the distance that the car will travel purely based on its battery power there, that will determine what percentage rate to apply to the list price to compute the benefit. Now again, that information, as we see here, is provided to you in the exam. And again, what you can see is the greater that electric range of the car, the further it can go without resources or returning to the supply of fuel there in the form of either, I'll get it right, isn't it? Petrol or diesel. Then the more distance it can go, the more like an all-electric car it would appear to be. And on that basis, there is a much smaller assessment. Again there, 1%, exactly as it would be as we saw up here with an all-electric car. But then as the amount of electric range reduces, then of course we see this assessment going up, such that when you get to, well, only a tiny amount of effectively battery power there, if its electric range is less than 30 miles, then it's 13%. So again, in an exam question, all you've got to do, pick up the information about the electric range, go to this table provided on your rates and allowances, and pick the percentage that you need to apply. That percentage, as we were told up here, is then going to be applied to the list price. But again, we've also got to be careful that if that particular car was only made available during the 21-22 tax year, then it's an annual benefit, so a time apportionment exercise will be required. But what about what are still the vast majority of cars that are either petrol or diesel powered, that have much higher CO2 emissions than a mere 50 grams per kilometre? So for any car, whether it is, again, hybrid, whether it is petrol, whether it is diesel, for any car that has CO2 emissions that exceed that 50 grams per kilometre level, then the percentage rate to apply to the list price is as follows. And again, this information is provided in your exam on your rates and allowances page. Between 51 and 54, so a pretty narrow range in relation to the grams per kilometre on your CO2 emissions there, then it is a set 14%. An even narrower range, if it is exactly 55 grams per kilometre, then it is exactly 15%. Now, of course, the chances are in any exam question that you are going to see the provision of a car here to the employee where its CO2 emissions are somewhat greater than 55 grams. So what happens if we go above that 55 gram per kilometre level? So here we go. For cars with CO2 emissions in excess of 55 grams, this base percentage rate of 15%, that's your base percentage rate, 55 gram per kilometre cutoff, that base percentage rate of 15% is then, surprisingly of course, increased. It is increased by 1% for every complete 5 grams per kilometre, up to a maximum percentage rate of 37%. So the worst that could happen so far as any employee is concerned is that the assessment for the provision of the employer, the company car, their provided car, that the worst it can be is 37% of, again, that list price. That's the worst it can be. Sorry, I should have circled there, but if we use again, the 37% figure. Now, again, just go back to that. It's going to be increased by 1%. So as soon as you see that the CO2 emissions exceed 55 grams per kilometre, you start with 15%. And then you're going to add to that. So what do we add? 1 percentage point for every complete 5 grams per kilometre. So what does that mean? Well, let's imagine that in the exam, we're told that the employer provides the employee with a petrol car whose CO2 emissions are 78 grams per kilometre. 78 grams per kilometre. That clearly exceeds 15%. It clearly exceeds 55 grams. So we start with 15%. Plus 1% for every complete 5 grams per kilometre up to the maximum 37. Well, with, I think I said 78 grams per kilometre there, we're not going to exceed in our assessment 37%. So what do? We only add 1% for every complete 5 grams per kilometre in excess of the 55 gram base rate percentage there, that base percentage rate. So what we do, when given a number, I gave you 78 there, we round down that grams per kilometre to the nearest 5 gram point. So 78 will again net down to 75. If it was 76, 77, 78, 79, then it rounds down to what would be 75. If it was 84 or 83, anything between there, 80 to 84, then we would round down to 80. So we round down based on taking our CO2 emissions figure, round it down to the nearest 5 grams per kilometre, multiple of 5 there, 78 goes down to 75, 83 would have gone down to 80, and then we'll go 75, the rounded down figure, minus 55 there, times 1%. So 75 minus 55, divide by 5, because it's 1% for every complete 5 grams per kilometre. So 75 minus 55 is 20. Divide by 5, 20 by 5 equals 4. So we've got 15% plus 4% equals 19%. That is the figure that we then apply to our CO2 emissions figure. So to repeat, now although this information about the 1% increase will be made available to you, it doesn't tell you the basis of it. That being for every complete 5 grams per kilometre up to a maximum of 37, you get the 1% increase. So pick up the CO2 emissions for this diesel or petrol car, round down to the nearest 5 grams per kilometre, 78 rounded down to 75, minus 55 by how much therefore does it now exceed that 55 gram level, that base percentage rate level there of 55 grams per kilometre, and then divide by 5. Because for every complete 5 grams per kilometre, we're going to add 1%. So times 1%. So we've got therefore 20 divided by 5 is 4, times 1% is 4%, add to your 15, and 19% would be the answer. What do we do with that 19%? Well, as we've seen, we would apply it to the given figure within the question of list price of that car. Notice list price. It's not what we paid for it. The cost of that car does not matter here. It is purely, as will be provided, the list price. But they might also give you the cost just to see what you do with it. Doesn't matter what you paid for it. Again, all that matters is what was the original list price of that car when it was provided to, when it was acquired and provided to an employee. Right. These percentage rates apply to both petrol-powered cars, as we've just been talking about, and also diesel cars. But with diesel cars, there's a further issue. It will only apply this calculation that gave us 19%. That will only apply as regards diesel cars, that meet what is referred to as the real driving emissions 2 standard. Again, you will be told in the exam, it will be expressed that way as to whether or not the car meets the RDE2 standard there. But if that diesel car does not meet the RDE2 standard, then the percentage rate that we've computed, here 19% was our calculation based on the specific CO2 emissions of that car. But if it was a diesel car that did not meet that RDE2 standard, then the percentage rate is increased by a set 4%. So 19% plus 4%, that would give you 23%, then to apply to your list price. Remember though, even when you apply that extra 4%, you cannot exceed that maximum percentage of 37%. Always the maximum is 37. So if before adding in the 4%, you had something like a calculation of 35%, plus 4 would be 39, you can't exceed. So the max figure is 37%. As we've said, that percentage rate that either we take straight from the rates and allowances page, or more likely here, as it will be either petrol or diesel powered car with CO2 emissions that do exceed that 55 gram per kilometre base level, that once we've established that percentage rate, then we apply it to the list price of the vehicle. Not the car, the list price of that vehicle. It will, of course, be given. What might also be thrown in, just to see how you deal with it, is that that list price would also include the list price of any accessories that were fitted to the car. So we've got a list price for the basic car, but of course the one that you've got has got all the knobs and whistles on it there, and that therefore has had a whole load of accessories applied to it. And that means that we've got to add in what was the list price of those as well. Again, if it is the case in an exam question, they're going to tell you what those list prices are. Having seen ways by which we compute and even increase there what is the assessable benefit in terms of the percentage, in terms of the list price, we could also note here that the list price would actually be reduced by any capital contribution from the employee subject to a maximum deduction figure, a maximum deduction of £5,000. What does that mean? What it means is that any employer is likely to have a limit as regards what the cost of the car is that they are willing to acquire for that employee. So the company might have imposed a cost limit of £20,000. But the one that the employee really wants costs more than that. Let's say £22,000. So because the employee has so got his or her mind set on that particular car, the employee says, right, I'll put the extra £2,000. I will make a contribution towards the capital cost of that car. This is a capital contribution. So the company puts the 20,000 limit that it sets for its employees, and the employee puts 2,000. We've got a capital contribution of 2,000. What do we do with that capital contribution? Well, we go back to what is the basis of this assessment, the list price. It is the list price. Now, I've said that the idea behind it is where the cost of the car exceeds whatever the company limit might be for that particular employee. But whatever the capital contribution is, whether they tell you what the actual cost of the car is or not, doesn't matter. The actual capital contribution to a maximum of £5,000 will serve to reduce the list price of the car. So every year thereafter, when we work out the annual assessable benefit, the list price we're using is the one that is being reduced by the original capital contribution made by that employee. But remember, up to a maximum of £5,000. If the capital contribution is, say, £7,000, we're only going to deduct £5,000. Once we've got the car benefit, so we know the percentage, we know the list price, we've multiplied one by the other, the car benefit itself is then proportionately reduced if, now remember what we said is an annual benefit. So if, of course, the car had only been provided halfway through the 21-22 tax year, and you'd have it from then to the end of the tax year, then only half of the annual benefit would be assessable. But it's far less likely to be tested this way if a motor car is unavailable for periods of at least 30 days of the tax year, unavailable to the employee, then we would again reduce proportionately the assessable benefit by that amount. We would have a pro rata reduction. Again, for us, as we work to the nearest month, it would be set in like a monthly basis. And also, and rather more examinable here, where the employee makes another contribution here, but a contribution to the employer for the use of the motor car. So be very careful when it says about a contribution made by the employee to the employer in relation to the motor car provided to that employee. Is it an original capital contribution? If it is, what does that reduce? It reduces the list price. But year on year, what we may find, it seldom happens in real life, but it may happen in an exam question, of course. The employee is required by the employer to make a contribution to that employer for the use of the motor car. So you might be told that the employee is required to contribute £50 per month back to the employer for the benefit. It might say in relation to the fact that, of course, any company car provided is also going to be made available for private use. So it's got to contribute £50 per month in relation to the private use. That £50 contribution made each month for the benefit of having the car provided to them and having the personal private use of it, that is going to be a reduction in the car benefit itself. So the car benefit, whatever was the list price times the percentage there, that car benefit will be reduced by the contribution made each year to the employer for the provision of the car itself. So if our car had been used by the employee throughout the 21-22 tax year and had been contributing £50 a month, 12 times £50 per month is £600. They might just say £600 per annum. But if, of course, the car was only made available halfway through the tax year, then it would only be 6 times £50 per month, or half the 600 annual figure, that would be the deduction from that assessable benefit. But a contribution by the employee to the employer in respect to having the available private use of that car, that is a deduction from what would otherwise have been the assessable benefit. Now that again is something you have to remember for yourself. If we got 2 cars provided by the employer, most unlikely situation you might think, but it doesn't matter, where more than one motor car is made available to the employee, the benefit of each motor car is computed in exactly the same way. Now you might think there that it's a very unlikely situation where the employer is going to say to you, I'll tell you what, don't just have one car, have 2 company cars here. But actually it might be rather more common than you might think, that what might happen is that you've got a family-owned company there. It's owned by the family, and what does the owner-manager of that company then do? He or she takes for either himself or herself not only a car for their own use there, but also maybe for the spouse or for one or other of the kids there. So they take more than one car. If that is the case, then the fact that an additional car or 2 or however many have been made available to that employee, then that simply demands another calculation for each such car to work out the overall assessable benefits that would arise in relation to the provision of those cars. At the other end of the spectrum here, we might not even have our own company car, but what we have when we go to work is the use of a pool car. Something here that, and defined as, the use of a pool car does not result in a company car benefit, so this will be an exempt benefit here, and a pool car is one provided for the use of any employee to use for business purposes, and it is kept at the business place of work. The employee doesn't take it home at night to go to and fro work there. This is a pool car. Again, it would be made very clear in a question that it is indeed such a pool car, and on that basis, that would be an exempt benefit. Right, now having talked you through all of that and having picked out and shown you what is available on your rates and allowances page, this just summarises here the information that is provided in the exam for the car benefit percentage. We've got that relevant base level of CO2 emissions is 55 grams per kilometre. And in relation to that, 55 grams, there is your 15%. There's your 14% for 51 to 54. The percentage rates applying to petrol-powered motor cars and diesel-powered cars meeting the RDE2 standard with CO2 emissions up to this level are, and there we go, we've got the 14% and we've got the 15% figures there. If we're talking about something that has an electric range, a 1% percentage applies to electric powered motor cars with zero CO2 emissions. Right down at the bottom end there, all electric, zero emissions, it's 1%. But then what about the hybrid ones? Here's your list of the various electric ranges and the various percentages provided to you there. Again, you may get one of those, but the more demanding exercise is where we see a car, either just petrol or diesel, that has CO2 emissions in excess of 55 grams per kilometre, and therefore demands that you compute, based on your base rate, percentage base rate of 15%, but you work out what the addition to that is, albeit up to the maximum 37%. And of course, if it's diesel, does it tell you that it meets the RDE2 standard? If it doesn't, then we're adding 4%. But again, up to that maximum ceiling of 37% there. Okay, now you might need a few moments just to go back through all that we have told you there. So if you want to pause at this particular point, please do so, before we then start to have a little look at example 4. If you're okay with that, of course, then we will carry on and work through this. All right. As ever, we look at what's the question's requirement here, and it is, of course, to calculate the taxable benefit here for our tax year 21-22 for these various, what might be called some a bit old now, but car-based people, shall we say. And we're told, during 21-22, the company, Speed Merchants plc, provided the following employees with company motor cars. Our first hero indeed, God bless him, Lewis, was provided with. Now, what do we look for as we go through? Remember, when you read a question, you don't have time to just sit there, read it through like it is a novel. You have to pick the relevant things up. What do we go looking for? Well, there's the first part. It's a diesel-powered company. And there's the next important information. We're only provided with that on the 6th of August 21. So that is part-way through our 21-22 tax year. So once you've established, it will be given to you, the list price. Once you've got then the, based on CO2 emissions, what the percentage to apply to the list price will be, then you're going to have to time apportion that annual benefit. Here we go. The car has a list price of £13,500 and an official CO2 emission rate of 122 grams per kilometre. We're also told that as it's a diesel car, whether or not, and here you'll be told in the positive sense, if it meets the RDE2 standard, you will be told so. If it doesn't say anything about that, then you can only assume it doesn't meet the RDE2 standard. It meets the RDE2 standard, so that removes the requirement to add an extra 4% to whatever otherwise would be the percentage rate to use. But we've got 122, that clearly exceeds 55 grams per kilometre, and therefore we've got 13,500 as the list price, no mention as to any capital contributions when that car partway through this tax year was provided. We know you have got to compute a percentage figure to apply to that 13,500, and then that figure, that annual benefit, needs to be time apportioned. So the only computation here that we've got to do to provide the detail to be able to determine the assessable benefit is what percentage rate we're going to apply to that £13,500 list price, and then to time apportion that outcome. Well, 122 does of course exceed 55, but we only add 1% for each complete 5 grams per kilometre in excess of the 55 gram cut-off figure. So what do? We round down to the nearest multiple of 5. That's 122, rounds down to 120. 120 minus 55, that's the excess above the 55 limit, divide by 5, because we add 1% for every complete 5 grams per kilometre. What does that therefore give you? Times 1%. That's the addition, add it to 15, and that will be the figure used to apply to the to the list price figure, to allow you then to time apportion from that date in the 21-22 tax year to determine the assessable benefit. Now, I would like you to pause here because I want you to actually do that before we then look through the answer for ourselves. Obviously, when you have attempted it, you look through to the answer. Only look at the first part of the answer for Lewis. Don't go and have a little look at what the answers are to Nico, Fernando or Jensen or Sebastian there. That would rather spoil it, wouldn't it? So just avert your eyes from anything other than the answer to the first part, dealing with Lewis. So pause now, you do that calculation, if indeed you haven't already done it. Okay, let's see how you fared therefore on this first one dealing with Lewis. There we go, now it's a pen. Right, as we knew, we detected, of course, that the CO2 emissions were above 55 grams per kilometre. We also determined that it was a diesel car, but that the 4% surcharge would not apply here because the RDE2 standard is met. We already knew that the list price was £13,500. Just counting through on your fingers there from when it was made available, was it the 6th of August or something, was it? But from August there through to the end of the tax year, and that came to 8 months of the 21-22 tax year. So the missing ingredient was that, the percentage figure to apply to the list price. Now that 28% is found by, because the CO2 emissions exceed 55 grams, we start with the percentage base rate of 15% there. We're then going to add to it, as we know, 1% for every complete 5 grams per kilometre above the cut-off base level of 55 grams per kilometre. So 122 rounds down to 120 minus 55, that equals 65. It's 1% for every complete 5 grams per kilometre, divide by 5, and that is 13. Times 1% is 13%. So 15% plus 13% there is 28%. As we've already said, the 4% surcharge that would apply to a diesel car if it did not meet the RDE2 standard does not apply here because it does meet that. And of course, as we know, it's 8 months of the 21-22 tax year, so the benefit now just check through your calculators, make sure I've updated that correctly from last year, should be 2,520. But 13,500 list price times the thing that you had to calculate, what is the percentage rate to use, times by the time apportioned element, how many months of the tax year was it made available for us. Good. Back to our example now. About the next two individuals, employees that we've got to deal with, we've got Nico, who was provided here with a new petrol power company car throughout 21-22, so no time apportionment to apply here. We've got the list price of 16,400, and this time official CO2 emission rate of, that's a big number, 162 grams per kilometre. So you have to round down the 162, of course, to 160, multiple of 5, minus 55, divide by 5, to see what add-on percentage to the percentage base rate of 15% you would then apply. Remembering, of course, that we can't exceed the 37% figure there. It's a full year's benefit, so you'll be able to work that. Fernando, we've also got petrol power company car. So if they're petrol powered, they're not diesel, so there's no chance of the extra 4% here. Again, throughout 21-22, of course, we're provided with the list price, and we need the official CO2 emission rate. This time, 249 grams per kilometre. Now, I think here, even without putting the numbers through your calculator, I think we can be fairly confident that when we add that additional percentage to 15, we're going to be going above what the maximum percentage rate is that can ever be applied. So you might be able to shortcut that exercise. But there is one new component. Fernando paid Speed Merchants plc £1,200 during 21-22 for the use of the car. So a contribution here made in respect of the use of the car, so that is deducted from the assessable benefit. It's not like an original capital contribution towards the cost of the car that if it had existed, well, that would have been deducted from the list price in your basic calculation to then be used in each year throughout which that car is made available to the employee. It's not a capital contribution. This is a contribution here that is going to be for the use of the car, and that therefore means you do it each year. Both of those were petrol. If I just skip Jensen for a moment and go to Sebastian, provided with the new diesel car throughout 21-22, there's our list price, our official CO2 emissions rate, and the car does not meet the RDE2 standard. So I'd like you to have a go at Nico, Fernando and Sebastian there, and we'll just leave Jensen for us to talk through separately after you've dealt with those three. We will talk through it, of course, in a few minutes after you've done the calculations, so pause now. Okay, let's have a quick look through, make sure that we're happy with the outcomes as provided in the model answer here. Now again, we know we need to pick up the list price of the car, that's £16,400. We also need to know the CO2 emissions, and they, being above our base level figure of 55 grams per kilometre, means that we now have to add to our 15%, our percentage base rate, an extra 1% for every complete 5 grams per kilometre in excess of the 55 gram cut-off level. The CO2 emissions figure given was 162. Round it down to 160, the nearest rounded down multiple of 5. So it is divisible by 5. Our base level percentage of 15% is increased, as we know, in 1% steps for each complete 5 grams per kilometre above that base level. That therefore would have been computed as 160 minus 55 is 105. Divide by 5, and that's an extra 21%. To add to the 15%, and that comes therefore to 36%. That's going to be 36. Just below what the maximum would otherwise have capped it at, a 37% figure. But this, we're just below it, so it's 36%. Apply that to the £16,400 list price, and we have our assessable benefit there. Again, here, what did I make that? All being well for our tax year, it was, of course, available throughout, so it's a full annual benefit at £5,904. So far as Fernando was concerned, well, Fernando's, the CO2 emissions that he had, bless him, 245. Huge. So even without doing the calculation, I show it there anyway. But even without doing it, we can see that the add-on to the base level of the percentage base rate of 15%, the add-on is going to take you well above 37%. So, of course, we will be using 37% here as the figure to apply to. Do we know the list price? Yes, we do, 22,600. We know we've got 37%, but also the add-in here was that there was a contribution made by Fernando, again towards the use of the car, which serves to reduce the benefit. This reduces what would otherwise have been the benefit. So it's not like, again, I emphasise, it's not like a capital contribution that would serve to reduce the list price to go into each year's calculation of an assessable benefit. It reduces what the benefit would otherwise have been. Both Nico and Fernando had petrol-powered cars there. We move on to deal with Sebastian. Again, we know that we have CO2 emissions that are above 55 grams per kilometre. We know what the figure is, 103, so it's rounded down to 100. The relevant percentage will then be 15% plus 1% for each complete 5 grams per kilometre in excess of the 55 limit. So round down, therefore, our figure of, what was it, 102, was it? But that rounds down to 100 minus 55. That's a 45 excess. Divide by 5, 9%. Add the 9% to the 15%, and we're going to have, therefore, 24%. But we have a 4% surcharge for diesel cars applied because the RDE2 standard is not met. So that means instead of being 15 plus 9, 24, add in an extra 4, taking us up to 28% there. Apply it to the list price and we'll have our assessable benefit. Again, as far as Sebastian was concerned, as I recall, it was available throughout, therefore, the tax year. And that leaves us with just one more to do, Jensen. Provided with, now this time it's not just pure petrol or pure diesel, we've now got a hybrid electric powered company car. Again, we'll take the full annual benefit because it was available throughout our 21-22 tax year. We, of course, always need to know the list price. It's 16,000. We then need to know about the CO2 emission rate and whether it is between 1 and 50 grams per kilometre. It is 38 grams. It does not exceed 50. Therefore, we get interested in the electric range, which here is quite high, 110 miles. And that means, of course, the higher the electric range, the better it is for the employee, because the lower will be the assessable benefit. That means that you don't have to remember anything here other than go to your rates and allowances information, look at that electric range. You are dealing with a hybrid electric car with CO2 emissions between 1 and 50 grams per kilometre there at 38, and look up what that assessment will be. You have a go, compute that number please, and then we'll quickly finish it off. Okay, let's finish off this particular session, therefore, dealing with Jensen. We know that the CO2 emissions do not exceed 50 grams per kilometre and that we're dealing with a hybrid electric car. Therefore, it is the electric range of the car that is relevant in establishing what percentage rate to apply to the list price. as this is between 70 and 129 miles, again, that you look up on the tables made available to you, we pick off the relevant figure. The percentage rate is 4%. List price £16,000, 4%, £640 for the year it was provided throughout the 21-22 tax year, and therefore we've established the assessable benefit. You can see here that we're talking about a much smaller assessment than have been some of the outcomes where we've looked at the provision of either petrol or diesel-powered cars. Okay, that brings this session to an end. As promised there, we've dealt with the determination of the car benefit, but that, though being the main issue to have contended with in relation to the car, sets the scene for another assessable benefit to be computed next, which we'll deal with next time, along with the remaining components of the assessable benefits in this particular chapter. But of course, not only, we've got a wonderful employer, not only does that employer provide you with the use of that car, but also then pays for some or all of your private mileage. That every bit of petrol or diesel that goes into your car is paid for, in part or in full, by the employer. And if, as we'll discover next time, the employer is paying for any part of your private mileage, then that will mean that a fuel benefit needs to be computed. But that, as we'll discover, is, given that by this stage you would already have established the car benefit, is then a very, very simple exercise to perform. But that, along with the remaining parts of the benefit section of this chapter, we'll deal with next time.